Good morning, Southwest Louisiana Association of Realtors. I'm Tim Castle. I'm your 2023 president. Today is our second installment of our Wake Up Wednesday. We have some of our affiliates here today. We have a lender panel here today. We have Ms. Shannon Maxfield with First Federal. We have Blake Pemberton with Pemberton Mortgage. And we have Jennifer Spees with Louisiana Mortgage Associates. So I'm going to turn the floor over real quick to these guys and let them introduce themselves. Ms. Shannon, if you want to start.
Good morning, my name is Shannon Maxfield. I am with First Federal Bank of Louisiana, and I am a vice president lender that deals mainly in mortgage real estate and consumer lending.
Hi, my name is Blake Pemberton with Pemberton Mortgage Group. We've been locally owned and operated here in Southwest Louisiana since 1999, and we've been affiliates of SWLAR the entire time.
Hi, my name is Jennifer Spees. I am with Louisiana Mortgage Associates. I've been with the company for 18 years, and we are locally owned and operated for the past 20 plus years and have been affiliate members for, I believe, just as long.
Good, thank you guys. So today we're going to talk about some really great topics. We're going to talk about what it takes to get a loan, how to get pre-qualified. There's some really good programs out there that these lenders are offering, and you want to stay tuned till the end, because at the end we're going to talk about a really hot topic that's going around today as it relates to fees and loans and credit scores and all that good stuff. So you want to stay tuned throughout the whole program today, because once we get into that, you're going to have to find some really helpful and very useful information for yourself and your clients. So I guess more than anything, I just want to start with, we have a client calls and says, hey, I want to buy a house. What do we do? Well, the first thing we do as realtors, we typically refer them to a lender to start getting pre-qualified. Jen, how does that process usually go?
So typically, we talk to a client, whether it's in person, whether it's online, and we get their information. And a lot of people tend to use the words pre-qualification and pre-approval interchangeably, but they're actually two very different things. Pre-approval is really when the client gives you all the information verbally and you work up some numbers based on that information. But the pre-approval is actually what the realtors are after. What the realtors want the pre-approval letter before we go show any properties to them, because the pre-approval is once the client has given some of the information to back up the verbal information that's been given. Check stubs, bank statements, to make sure that the verbal information we've gotten is accurate and on track, that we can really get them approved for the amount that we've told them we could.
That seems like a daunting process. It's bound to take, what, at least 2 or 3 hours to do something like that, Shannon?
No, if you have an interview, whether it's face-to-face, online, that process can be usually within 30 minutes or so. Application, gathering the information, and then, but depending on how many questions the customer may have,
Certainly.
that it could be, take up to an hour or so.
Always there's a big fear whenever we talk to clients about buying a home. They're like, but I don't have 20 or 25% to put down on a home. I mean, so many of our clients think they need 20% down payment. I mean, Blake, is that still the case?
Tim, that's a great point, and we still get this question all the time, believe it or not. And there are programs out there, 0% down, 1% down, 3, 3.5, 5, all the way up to 20 or more if you decide to go that route. So there are a lot of affordable loan programs out there to help people who want to take advantage of jumping in the market now and gaining some of that appreciation in their home value over the next several years, instead of just waiting until they can save up that 20% to put down.
Great point. They've got under 20% down, then they walk in with this little mortgage calculator and they're like, I don't think I can afford this mortgage rate and this interest. Jen, are these things any good, these mortgage calculators people look at?
The mortgage calculators online are terrible.
Really?
I absolutely hate when people come to me with those. Number one, you don't know what loan program or product you're going to go with. You don't know what the interest rate's going to be. They are usually showing the homeowner's insurance at $50 a month.
Oh, yes.
Everyone in Lake Charles knows that your homeowner's insurance is not going to be $50 a month. They're showing super low taxes. So people are actually coming to me going, my payment's only going to be $900 a month.
Right.
And your payment's actually going to be $2,100 a month,
Absolutely.
So no, absolutely stay away from the online mortgage calculators. There's too many variables that you don't know the answers to to input to get the correct answer.
And stay away from online lenders. Oh, did I say that? I'm sorry. Yeah, stay away from online lenders.
Stay away from online lenders.
You know, there are good programs out there. Shannon, does First Federal have any programs right now?
Yes, we have many programs. You know, we offer, you know, USDA, VA, and we also have great first-time homebuyer products where for a first-time homebuyer is as little as 3% down. You can also use seller concessions with that, and there's also other great homebuyer assistance programs out there.
That's a great point. One thing I need to point out more than anything that some of our viewers may or may not know, Shannon works for a savings and loan. That's an actual thrift. Jennifer and Blake are mortgage brokers. They have products individually through their institutions and through their correspondent lenders that they all use and correspond with. So they're all three going to be able to offer different programs that can be tailored to your client's needs, to a home buyer's needs. Blake, how's that market looking?
Yeah, so it's great to have some flexibility in different options, which we all have. And the most important thing is for when a client comes to us, we're going to determine what their needs are. And we're going to do that by listening to what they have to say and what their financial goals are. Obviously, we're looking at monthly payment and cash to close. But when we dig deeper, we want to look at which loan programs are available and how these loans perform over time. Because we know that the average person keeps a loan or even a home for 7 years or less. So it may not matter that you pay $20,000 in points to get the lowest interest rate, because it's going to take you so long to break even on spending all that money up front for a specific program that it may not even make sense if you refinance or move away from that house within a specific period of time. So what we try to look at is making sure that we look at all the programs available, which one's the best fit, and how the loans perform over time for the specific period of time that the borrower is going to have the loan.
Great point, great point. As generations move along, our grandparent and parents' generation did stay in homes a lot longer. It's as generations change, people stay in homes for a shorter amount of time. They move, they change jobs, things have changed in society and as a culture, etc. So we look at those things, and that's a great point, Blake. How long do you think you're going to be here? What works best for you? Jen, any programs at Louisiana Mortgage you want to speak about real quick? And while I got you on the floor, anything do's and don'ts for, we've got the process going, here's a loan program, but don't do this while we're in this process, and we'll chime in.
I'm glad you asked that. There are actually a great list of things that I send my clients, don't do this. And those things include, and people often ask, why? Don't change your marital status. Because we're in a community property state.
Oh,
so
yes.
if you start your loan application as unmarried, don't go get married, because it will change everything. Don't change your job. Don't change your income status. People will say, well, I just got a brand new job. I'm going to make so much more money and I'm all commissioned now. Your loan is now denied. And people don't get that or don't understand why.
Absolutely.
So there are a lot of things that we say don't do. Don't deposit a lot of cash into your account. Cash deposits, don't make any cash deposits. Don't run up any credit cards. I tell people, go home, turn the lights off, and don't have any fun until this transaction
Absolutely.
is done, is what I tell people.
There's lots of fun to come.
Right.
What about gift money? Do y'all want to talk about that? Blake, you want to expand on that?
Yeah, sure. So gift funds are eligible for most loan products. So if someone doesn't have the funds available for a down payment or for their closing costs, then oftentimes they're able to accept a gift from a relative, close personal family, friend, employer, etc. There are a list of approved gift donors, and sometimes that will ease the burden of coming up with that initial lump for their cash to close.
One last thing I want to touch about on loans real quick. Shanna, any 100% loan products out there?
We do. We have 100% financing on lot loans, which is for a residential lot, 10 acres or less. We do 100% on that. And then
Blake, you got one?
Yep, VA, rural development. We do have a 1% down conventional loan. We do have an FHA loan with 0% down, and that's a down payment assistance program. But those are ultimately the ones that we have access to.
They're the best ones out there. Jen?
Same type of programs, and one thing that I do like, that as far as 100% programs go, we've got the DPA, we've got several different down payment assistance programs. Most of what you're gonna wanna look for in that is with a forgivable second mortgage. That's what you're gonna wanna look for in a down payment assistance program.
Oh, yes.
As far as 100% down, we can do mobile homes with rural development, which I don't know a lot of people can do. So that's another thing that's helped people.
It is out there, it really is. So we've met with you all, our clients are on the process. What kind of timeline are we looking at from start to finish? Are we looking at 30, 45 days? You know, years ago, we could squeeze them into 30 days, then we hear 45 days, and then I called a lender and they said, give me 60. I'm like, 60? Oh my Lord, what's going on? What's the timeline looking like these days, Shannon?
And normally on your conventional, you're talking about a 30-day time span for time of application, because when we do a rate lock, we're doing a 30-day rate lock. So we're pushing to go to closing. So the faster you can get your tax returns, income documentation, verification that we need, faster we can go to closing. Some of those a little bit longer, rural development, because it has to go to rural development, get approved before we can do a rate lock. So sometimes we're waiting on a third party like rural development to make that decision before we can lock the rate, which can go past the 30 days.
Good point, Blake, same?
Yeah, same. So I was looking this up yesterday. The national average at the moment is 52 days.
Gotcha.
And, you know, I would say most loans probably close within 30 to 45 days in our market. We try to close everything in 30 or less. Our average time from application to clear to close is about 15 days right now.
Jen?
Yeah, same. We try to do everything in 30 days. If it's rural development, I will ask for a 45-day contract. You just never know, you know, once a file is approved, it actually gets packaged up and sent to the local state rural development office. And you never know what their load is and how long that's gonna take.
You know, a great point that all of y'all brought up is that first meeting you have with the client. The client is here to talk about loan products, and I know y'all are giving them a checklist of what they're gonna need to bring to you when they do their initial formal application. They now have a contract, they're ready to make an application. Here's what it is. Jen says, go home, live in a box, don't do anything but bring me all this stuff. Blake says, get ready for a ride, it's gonna take you 52 days, and Shannon says, we got you, just make sure you bring me everything on time. We got it. All right, good. Any other loan products or anything y'all want to talk about before we jump into another subject matter? All right, y'all ready to talk about it?
All right, hold on.
Okay, guys, let's talk about the elephant in the room. You know, I had an agent come into my office last week, and they're like, Tim, what is this that our clients with good credit scores are going to have to pay higher fees in connection to their loan? Our clients with lower credit scores are not having fees. I mean, there's a lot of bad stuff coming at us right now that we're just not understanding, and it doesn't feel right. And hopefully y'all can shed some light on what's going on.
Yeah, no, it's everybody's got it wrong. It's because everybody seems to be getting their news from TikTok these days, and it's all wrong. So the whole thing's getting a really bad rap. You want to talk about it?
Yeah, so basically there's a misconception out there that the people with higher credit scores are now paying more than the people with low credit scores. But the simple fact is, if you have higher credit, you're still getting better interest rate, better pricing than someone with lower credit. What they've done is they've just shrunk the gap a little bit between the higher credit score borrowers and the lower credit score borrowers. That way it's a little bit more of an even field.
Gotcha. Well, that certainly feels better than what I was hearing.
People are saying, I'm just gonna let my credit go to crud
Right.
and get the better scores. And it's like, time out, that's not what this is about.
Yeah, we hear higher fees and everybody's like, great, higher interest rate, higher fees. You've worked real hard to get your credit. We're gonna get punished for that, but it's not it, Blake.
That's
It's
correct.
not it at all.
That's correct. In fact, Shanna had pointed out earlier that we are seeing people with really high credit. So it used to be 740 or above is all the same. Now, if you have a 760, you're going to get a pricing improvement. If you have a 780, you're going to get another pricing improvement. So they're actually rewarding people for having the super high credit scores, which is a great thing.
Wow.
Yes, with those extra higher credit scores now, they would actually pay a little bit less or the same than they were before. So increasing that credit score amount with the better credit scores is actually helping.
That's
And so
incredible.
it has,
Well, that makes me feel better. Kind of makes me want to get motivated and go back to work now.
Hi, my name is Shanna Maxfield. I am a vice president and a lender for First Federal Bank of Louisiana. First Federal Bank has been an affiliate for many, many years. We are a local bank, local decisions, local lending. First Federal Bank originates loans mainly in the Southwest and Central Louisiana area. One of the things that I love about First Federal Bank is the variety of products that we offer. One of the great things that we offer about land financing is 100% land financing, no down payment, minimal closing cost. We also offer USDA, FHA, VA, and also in-house lending. That's a little bit different than secondary market lending. So your in-house lending is a loan that is originated with First Federal Bank, it is closed with First Federal Bank, and the customer will always make their payments to First Federal Bank. What that means is a face, if a customer ever has a question, they know who to go to, a local lender that can help them answer any questions that they have with their loan payments. One of the products that we also offer that is also very popular is with home equity lines of credits, and bridge loans. And bridge loans is a great way to bridge the gap to get the equity out of your house today, to bridge the gap of selling your house versus purchasing your new house without having to put a seller concession on a purchase agreement. You can reach me directly at the main office at 337-421-1113.
Hey, I'm Blake Pemberton with Pemberton Mortgage Group. We're a locally owned and operated company. We've been here since 1999, and we are a mortgage broker. And what exactly does that mean? It means we partner with multiple wholesale lenders across the country. So we have the ability to evaluate on every single transaction for every single deal. Pricing, we're gonna always make sure that our pricing is super sharp because we're gonna shop around to find the best rates and pricing for our clients. We're gonna look at pull-through. Where is our client gonna have the best experience where they don't ask for all these documents that aren't really necessary per the underwriting guidelines? And lastly, speed. Where are we gonna be able to get our clients through underwriting from start to finish as quickly as possible and make that process seamless? So we evaluate those things each and every time we have a new client come in, because we want to make sure that not only are we fitting them in the right product with the right loan strategy, but also that we're matching them with the correct wholesale lender to make sure that they have a great experience. And since we're talking about experience, obviously those other things are all important, but the most important thing to us is that we manage everyone's fears and expectations, and we give them that great experience. In fact, we call it our CARE method, create a referable experience. And we're gonna make sure that every single time that we have a transaction, whether it's we're communicating with our realtor partners or communicating with our actual borrowers and clients, that they have a great experience. That way, they go tell all their friends and family about us because they just had such a great time going through the process. In fact, we've got hundreds of 5-star reviews online. So if you don't believe me, go Google us and you'll see what people are saying about us. We're right here, we're local. So if you ever need anything, please give us a call. We would love to help out. Thanks.
Good morning, I'm Tim Castle. I'm your 2023 Association President. Today we have an affiliate spotlight. We have Jennifer Spees with Louisiana Mortgage. I know Jennifer, I've known her for many years. We've both been in the business respectively in real estate and in the loan business as well. Jen and I have done deals together, but more importantly, I wanted to take a minute to introduce you to Jen and let her tell you about some of the products she does, tell her about herself, what she can do for her clients. Jen, welcome and thanks for being here today. So have we really been at this long?
Yeah, I think we have. We've known each other for like 30 years. That's crazy.
It is.
I think we both started when we were like 5.
5, yeah. I was 6, you were 5.
Yeah. Yeah.
What kind of loan products are out there right now?
There's all kinds of stuff. There is down payment assistance. We do a lot of mobile home stuff that a lot of other people can't do. We can do mobile homes on rural development, FHA, VA, conventional. A lot of people are wanting to go that route. I do something that I think is in my tool belt that I think a lot of other people forget about. It's called the recast of payment. And so if you get into a conventional loan, let's say that possibly you aren't able to sell your other house before you buy the next one. So you don't have a large down payment.
Right.
So you're able to purchase the new house, maybe 5-10% down. After you purchase it, you're able to sell the old house, and you take that money that you've gotten and you put it down. You're able to recast that payment. Because typically if you just put money down on your principal on any mortgage loan, any conventional loan, it's not gonna change your payment.
Right.
This will change your payment, and we'll get rid of PMI if you had that. So we're about to heat up this market. I truly believe this market's about to heat up,
Wow.
and we're gonna start seeing people buying houses without, they don't want the contingencies. The sellers
Of course.
don't want the contingencies on their
course.
contracts.
Of course.
So that is a tool that I believe is gonna be utilized a lot.
Awesome. No PMI.
Well, if you take that money that you used on
Yeah.
the other house and you put it down and you had PMI,
Wow.
so you just bought this house 3 months ago at
Right.
5% down, now you've used that money, your proceeds that you sold,
Mhm.
and it'll get rid of the PMI.
Wow, that's great. That's great. Hey, let's take a minute to talk about Louisiana Mortgage.
Okay.
You all have been in business for many, many years. I know your principal owner, who is Keith Wimberly. We've done deals with your company. My agents have done deals with your company before. Tell us a little bit about Louisiana Mortgage.
Louisiana Mortgage is locally owned and operated. One of the things I love is that we started a 501c3 probably 10 years ago. And at Christmas, we go and spend several $1,000s, and we give Christmas gifts to children who otherwise wouldn't have a Christmas. So we do a lot of community stuff, a lot of volunteering stuff, things like that.
Wow.
So that's one of the things I love about the company.
Really give back to the community.
We try.
Well, that's great. Y'all have a great group of people there. I know many of the originators there, and y'all are really, really always participating on an association level, and we're so grateful for that. Thank you so much. And please extend our thanks to Keith as well.
I will do that.
I want to thank everybody for joining us today for our second segment of Wake Up Wednesday. We had a great panel here today. Thank you, Shanna. Thank you, Blake. And thank you, Jennifer. We greatly appreciate all of you all for being here today. That pretty much concludes it. I hope you all enjoyed our segment today. Join us next Wednesday for another Wake Up.